Welcome to Market View with Ike Ios and friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now. Market Views.
Good morning. Mike Ios, your host for Market Views. Today's guest is Mr. Sherman McClellan from the McClellan Oscillator. Sherman, hi, how are ya?
I'm very good.
Sherman, I have been following your work for 30 years, and each time I learn something new. Not too long ago, you did the presentation for the Foundation for the Study of Cycles, and I was totally fascinated by the things that you presented. Let's talk about the first chart.
All right. The first chart has a New York Stock Exchange composite on the top, and I've drawn a couple trend lines on it to show the structure of what we're seeing now. And we have a downtrend line across the tops that's controlling the pattern on the top side, and we have an uptrend line from 2015 that's where the consolidation took place after the first advance up to the June 8th top. And so now we're in this contracting triangle kind of structure.
It does look similar to what we saw after the bottom in 2015 and also after the bottom in 2019.
Right, it does have that kind of look to it, and there's similar kinds of structures. The bottoms that we've had touching the line on the lower chart is the Advanced Decline Summation Index, McClellan Summation Index, and you can see that we've got down to very low level at the March low, and we've bounced up very similar to how we did coming off of the 2015 low, 16. And so now we're in this little topping pattern, and we look at the next chart, and then we've got some lines drawn on the Summation Index to show how its structure is working out.
It's amazing that it held the trend line going back to 2014, 2013.
Yes, and the times that we've gone below that trend line in 2018, going into the December bottom of 18, and then the one this year, both times we've broken that line by any amount of consequence, we've had some pretty big declines. And so we bounced off the line again at this recently, and now we're trying to turn it down, but it hasn't turned down. It might get that done today, which is the 24th of July. If it does break that line significantly, there is some market risk as a result of as what we've seen before when it's broken that line importantly. So that's the risk I wanted to show today. And then the next chart has both trend lines on both the New York Composite and on the Summation Index, so you can see how they're tied together and how it's very difficult for the Summation Index to go up from the level where it is now. It has many, many tops in that area, but it doesn't have to go down an awful lot, but it does have, it's running out of room within that contracting triangle, as well as on the price structures as working in that contracting triangle also. So we're going to resolve that, but we don't know exactly how that's going to occur yet. Next chart shows the Dow Jones Industrials, and I've drawn a trend channel on it to show how the tops are related and how the bottoms are related also. And it's very similar kind of structure to the New York Composite, and that we are started out from the 2016 bottom across the 2018 bottom, and that's what's controlling the pattern so far.
When you look at the behavior of the oscillator between 2014 and 2015, between early 2018 and December 2018, we see kind of a double bottom. It's been my experience that when we get such a sharp decline, usually you see some sort of a revisit. The decline from February of this year was very sharp. It was like a waterfall type of decline. And actually, I'm surprised that despite seeing the oscillator price oscillator down to like minus 2100, I believe, we have yet to see another dip below the zero line. Isn't that strange?
That's what I'm concerned about, is that if we are to have a retesting, and all we've been able to do is been done so far to the upside, and that's a problem. The problem is that the federal government, the Fed, has thrown $3 trillion or more at the economy in QE4, and all the other times when we've had QE1, 2, and 3, that's always been bullish for the market, and it's been very hard for it to go down. So it may require that we have to see the end of the Fed doing its thing before we can get a major correction. And if we're going to get that, the most likely time is going to be in the fourth quarter. We're seeing very real money, and Congress is still talking about throwing some more money at it. And so it is going to be very difficult for the market to go down by a large amount until all of this money gets thrown at it, and they wind up without the ability to continue throwing money at it.
Our next chart is also the Dow Jones close with the price oscillator.
Yeah, and the price oscillator then has some trend lines drawn on it. As you can see, it wound up into a contracting triangle and then broke down out of that out in the February-March decline. The price oscillator broke down out of that contracting triangle and then had the lowest reading it's ever had, and then it's wound up with the highest reading it's ever had. And now we're back into, we broke down below that uptrend line in the recent action, and then we've rallied back up to the underside of that rising trend line and turned down on July 23rd. So the issue is, if it's continuing to go down, if it breaks back below the downtrend line and takes out the recent low, that would provide an excuse for the market to sell off.
It looks trapped between two trend lines. Usually, isn't that a sign of indecision?
That's what I wanted to show, is that we are trapped, and we're trapped by the terrible economic conditions on the downside, and we're trapped by the huge volumes of money that's being thrown at the economy and the market and people by the federal government. And so we are seeing this trapped, and now we're going to see this expanding condition of the two trend lines. And so we may still increase volatility and have great volatility for the rest of the year.
Well, if we look at our next chart, which also has the rising channel that the Dow has been, and then it broke it and it got right back into it. Looking at the rising channel, the fact that the Dow got back into the channel, that's bullish. Then when you look at the oscillator, as we just said, it's trapped between the two trend lines. So when you combine the two, what's the verdict?
Well, if we do go back below that lower channel line on the Dow and on the S&P and on the New York Composite, there is certainly a negative condition. I would point out that the bottom that we had in March is right at the tops that we had in 2014, 15, 16, and so it was a logical place to find support. So it's going to be interesting to see whether we can stay within this uptrend channel and have the amount of money that's being thrown at the market get it back up to new highs. And if it does get to new highs, it should reach the upper channel line. So that's what but we have to break this downtrend line first, and that's what we're up against right now.
Our next chart is gold and silver, which have been the stars for the last few months. Silver especially looks like it's completing a base going back to 2013.
That's what it looks like. There's an 8-year cycle on gold, and the top was at the end of 2011 on the left, and I've drawn a line across from the current price top on gold. And so we're about almost equal up to that 2011 high, but not quite there. And we're getting a very rapid movement up on silver as a last gasp. At the very top, if you look at 2011, the top in gold came in with a lower top on silver. So we got a divergent structure on the silver not going to a new high and confirming the top in gold, and that was the top in gold at that point. Now, what we have in the latest action, silver is way below the 2011 top, but gold is testing that top. And so it looks like silver is behaving very well. In reality, it's diverging quite a bit. The top is around $22, and it was $50 at the 2011 top. So we have a big divergent structure. And when we've seen these accelerated late moves on silver, that's generally being associated with a topping condition for both gold and silver. So it's a dangerous condition right at the moment, partly because of the 8-year cycle coming in, and partly because the silver is significantly diverging in price, in its larger price structure from what gold is doing.
Our next chart is where people can find your work. And I must say something. I always talk about how fascinated I am with your work, which I have been following for 30 years. But also, I want to add that Tom does some equally fascinating work for lots of different sectors. And it can be found at www.mcoscillator.com. Would you like to tell us a little bit about all the things that Tom does?
Well, my son Tom is a really exceptional person. He's a graduate from West Point and served in the military for a number of years. And then when he got out, we did some work to get kinds of data that we needed to put together to start a newsletter. And he does almost all of the writing, does all of the writing for the daily edition, and does almost all of the writing for the market report that we do twice a month. And he has a very intellectual interest, is very widespread, and really enjoys looking at a whole lot of different things. So he's a very unusual person and very talented in his ability to look at charts and understand what they're saying.
I must add, I have seen some of the most unusual charts I have ever seen. Tom really does some very unique work, and I do encourage people to visit the website and look at it. It's fascinating.
We do a chart and focus every week, and Tom writes that, and it's very wide ranging. It doesn't have much to do with what you ought to be investing in or what to do right this minute or that kind of thing, but it's an educational thing, and it is promotional, of course, and it's cheap. It doesn't cost anything. All you have to do is sign up for it, and it gets emailed to you, and it's available on the website. You can look at it there. Anybody can visit and see that.
I was looking earlier at for example, at the copper and gold ratio that Tom has posted. Take a look at it. You'll find some really unique work.
The chart and focus that will be out later today is a very interesting analysis of gold and silver, and will tie in with what I presented today with the gold and silver analysis.
Sherman, anything else you would like to add?
The only other thing to talk about is bonds, and we're seeing just a runaway to the upside on bond prices and decline in yields to a new low today on 5 years and treasuries. So it's going to be interesting to see how that all works out. Whether we'll go to negative or not, I don't know. I'm following the European negative. Of course, they have a different situation over there. They can require their retirement funds to be invested in government bonds. The central banks are making those in negative yields, and so it is forcing retirement funds to invest in government bonds that are showing a negative interest yield. And in the United States, we don't have that similar condition, and so there's not any pressure by the government or incentive by the government, let me say, to go to negative interest rates. So we have a little different situation here. So it's now that we're basically down to zero, there's very little more room for the Fed to lower rates, probably approaching the top.
I may add something. I was here in Greece when Greece went bankrupt. And what happened, because of the laws that you just mentioned, Greek pension funds were invested in Greek bonds. When Greek bonds fell to 30 cents on the dollar, pension funds went bankrupt as well.
Yes.
The government telling funds where to invest can be very dangerous.
Well, the U.S. government is borrowing trillions of dollars, and at zero interest rates, that isn't a problem. But if interest rates go back up to 3 or 4%, that will be a problem. So this is creating a very risky situation for the U.S. government as a result of this amount of debt that they're incurring.
Sherman, thank you. Always fascinating speaking with you.
And you too in there too.